Hey, what's up, guys? Tyler here, back with another weekly edition of Backtesting Silver Bullet. And it's going to be a little bit different video this week. I'm not going to cover ES and NASDAQ. I actually would say if you want to backtest NASDAQ, I would just say go backtest it, on your own. I'm primarily looking to trade this on the S&P 500 most of the time. I will take trades on NASDAQ if there's SMT divergence where it makes way more sense to take it on NASDAQ. But for the most part, guys, I really want to focus on ES. Plus, I think it'll make it just a lot easier and simpler for all of you fine folks watching this. So we're going to actually, however, do something a little bit different this week as well. We are going to not just backtest the AM Silver Bullet session, we're going to backtest the PM Silver Bullet session for each day. And we are also going to not just focus on the 1 minute time frame, but we're also going to consider the 2 minute and the 3 minute time frames as well, to see if that changes anything and if that saves us from any bad trades, losing trades, etc. So yeah, guys, hope you're ready. So dropping down to the 1 minute time frame, looking at ES, let's see what we get for day number one. And again, guys, we're not considering any daily bias. That is a whole other lesson in and of itself. We're not considering higher time frame draws on liquidity. I understand those are all very important. I understand that that's going to increase your win rate substantially. But again, just for the simplicity's sake of the video, we are focused on just the principles of the strategy itself, okay? So, and then the other thing to note is I have my trading view set to Central Standard Time. I live in the Midwest. I live in Central Standard Time, so I'm 1 hour behind New York local time. That's why it's 9 a.m. Central instead of 10 a.m. Eastern. So just a disclaimer before we get into that. The PM Silver Bullet session for me is during 1 p.m. Central versus 2 p.m. Eastern, which is New York local time. So just so there's no confusion as far as that goes. Coming into this Silver Bullet Hour Monday morning AM session, let's mark up this hour. We want our entry to come in this hour. We want to wait for a sweep of liquidity followed by displacement so that we can get our entry. So here we go. We've got a run on liquidity right here. Now we want to see displacement to the upside in order to find a trade. So here we go, waiting for that displacing candle to give us a fair value gap. Here is the first fair value gap formed. Right here, we can anticipate getting long in this gap. Our stop would go right below this low. You could even tack on an extra tick right there. So now your stop loss is 4.5 handles. Does it pull back into that gap? It doesn't. It does not pull back into that gap. But if you notice something interesting, and that something interesting is that we left a fair value gap right here. And price did pull back into this fair value gap. So if you were waiting for this gap, doesn't look like it would have caught your entry. Hold on. No, maybe not. But if you would have caught this gap, it looks like it would have. And you would have put your stop loss, most likely the way I would have placed my stop loss would probably be one tick below this low, because we'd still be under that 5 handle, kind of a max stop loss for the 1 minute time frame, and then we could target 5 handles. And the reason I say it's a max stop loss of 5 handles is not because that's like a hard need, like it's not a requirement that it always has to be under 5 handles, but I'm always wanting at least a 1-to-1 risk to reward. And in the event that I wanted a bigger stop loss, like a 6 handle, 7 handle stop loss, I would just make my TP1 a 1-to-1 then. So I'm just giving you guys my honest back testing and my honest trading plan as far as how I would realistically approach any setup in the market. So I'm not going to lie, this would have been a much harder entry to catch because I most likely in a live scenario, just being honest with you guys, I most likely would have wanted to wait for this 1 minute fair value gap down here. And that's just me being honest. So, but just for sake of the video, we're obviously going to entertain this strategy, the principles, because the principles do stay, or they do say that you could definitely enter here if you were willing to do so. So in this case, you would have hit TP1. Take profit 2 would be like this high right here, which also gets hit And then if you were to target higher levels of liquidity, like maybe up here, it looks like we do end up pushing higher that day during AM session as well. And now, as promised, let's drop down, or let's go up rather, in time frame and see if we see anything different whatsoever. So the only thing we see different is we still have a fair value gap right here on the 2-minute time frame. Okay, great. We have a 2-minute fair value gap here as well that you actually would not have caught an entry from because it never pulled back into this fair value gap. And realistically, I don't think you're catching a trade on the 2-minute time frame. Where's your entry going to come from? I don't think you're going to enter here for a buy. That wouldn't make any sense. And if you did, your stop would be below here and you probably got stopped out. So yeah, 1 minute was really the only way to catch it as far as what I can tell. And then looking at the 3-minute time frame, just deleting all this to keep our chart clean. And so you guys don't get confused and we can see everything the exact same. Here's the fair value gap, no pullback into there. Fair value gap right here. Again, no pullback into there during the silver bullet hour, so no entry on the 3-minute. And just for fun, let's look at the 5-minute. And yeah, same exact story, guys. So the only way you would have been able to catch the entry on ES on Monday would have been the 1 minute, and it would have been a kind of a trickier entry. It would have been right here, right? Would have been trickier, but you definitely could have caught it. So, okay, great. So, if anything, either no trade Monday or one win. And all take profits were most likely hit. But let's get over here to the PM session hour, which is 1 p.m. Central for me. Okay, great. Let's go up to the 15 so we can get over there a little bit quicker. Here we go. Drop down to the 1 minute again. And just a disclaimer, guys, when I'm looking at PM session, and I'm going to approach this how I actually would trade a live market. Whenever I'm trading PM session, I don't have like a magical reasoning for any of this. But when I'm trading PM session, I'm only ever looking at the 2-minute or the 3-minute time frames for my entries. And that's just me personally. You guys can backtest the PM session on the 1 minute if you really, really want to. I'm simply going to do it on the 2-minute and the 3-minute. Okay, so I'm just, again, that's how we're going to test this PM session because this is how I like to trade once we get later in the day. So here I see we've swept this low. Right before PM session. And again, the liquidity sweep doesn't have to happen during the silver bullet hour, but the entry has to come during the silver bullet hour. So again, here on the 2-minute time frame, let's see if we see any fair value gaps that we could look to enter off of after this liquidity sweep. And we do have a couple that have already formed. We've got one here. We've got one here as well. And we actually have one right here as well. And just so you guys know how my brain works with this stuff, the way that I would decide what fair value gap I'm entering off of is what I would do is I would grab this swing low. I would drop either a Fibonacci or a Gann box. And what I would want to do if I'm getting long is I am only interested in going long in a discounted price range. And I'm only looking to get short in a premium price range. So basically all that is anything above 50% of the fib is considered premium. Anything below that is discount. Smart money is looking to buy in discount and sell in premium. So that's how that works. Let's see how this plays out. As price pushes higher, we'll continue to drag this PD array just to see if these levels change and if any other fair value gaps become worthy of taking a trade from. So now we could look to enter here as well. This fair value gap would be totally playable for me at this point because now this is also in a discounted price range. So as price is pulling back, I would then start to anticipate getting long inside this fair value gap. And what I would do is I would put my stop loss 1 tick below the 3-candle sequence of the fair value gap that I'm looking to enter from. And again, if you wanted to put your stop loss below here, absolutely you could do that. Just make sure your TP is 1-to-1. So just for sake of the video, let's go ahead and do that. So here we go, 5-handle stop, 5-handle TP1. Let's see if this activates. It does. It activates right here. If you drag that up just for good measure, this fair value gap never would have become valid for me to enter off of, but I would have entered off of this fair value gap for sure. And TP1's right here. Let's see if it gets hit. It does get hit. Great. Now let's target our next take profit, which would be right here for me, be 9 handles. Let's see if that gets hit or if we get stopped at break even. Did that get hit right there? Oh, not quite. Not yet, anyway. And here it does get hit. So amazing. So 2 take profits got hit. Let's see if a 3rd take profit got hit just for fun before the end of the day, which for me is 4 p.m. Central. Honestly, by 3:30 actually is when you're looking to be done. So I would be done. I'd be done here at TP2, and if not, if I was still in it, I'd be closing literally right in this area. So that'd be it. So you'd be TP2 and done. Either way, whether your stop loss was below the 3-candle sequence or at this low, either way it would have worked out. Even if you said I want extra protection, you went below this low, again, I would just make sure TP1 is at 1-to-1 in that scenario. Okay, so it's up to you guys how you want to set your stop losses. What I've been doing that I'm very comfortable with and I think works very well is if I don't need to set a 5-handle stop loss and I can put it below a low or above a high and I only need a 3-handle stop loss, I'm going to do that. And I'm going to still target 5 handles because then I'm just increasing my risk to reward. And if that structure is not going to hold, then I'm not going to just add on extra risk for no reason. So hopefully that makes sense. And hopefully we can find some more examples of that here in just a second so I can, maybe talk about that a little bit further. But again, all in all, good trade here on the 2-minute time frame PM session. 3-minute, let's see if anything looks any different whatsoever. And the only thing that looks different is just the fair value gaps, right? So we've got still a gap right here. 3-minute time frame doesn't get tapped into. This fair value gap does get tapped into. And honestly, this fair value gap and this fair value gap end up kind of overlapping. And this would have still been the same gap that you're looking to enter off of. However, you would have got probably a little bit worse of an entry, it looks like, if you'd have done this. Because what you'd have done is you would have, if you're using your equilibrium again, I would have been targeting to enter off of the equilibrium that's resting inside the fair value gap. So not a big difference, but a subtle difference depending on the time frame. So 2 minutes kind of been like the sweet spot for me when it comes to looking at the PM session. I really like the 2-minute a lot. It kind of eliminates some of the noise from the 1 minute, but also is getting you into the move quick enough. So I really like that 2-minute time frame for that PM session. So without further ado, let's go ahead and move over to Tuesday. As of right now, you're actually 1-1 best case scenario, or if you didn't take a trade during AM, you took this during PM, and you're at least 1-0 on Monday, but we'll just say for the record 2-0. And let's go ahead and get over to Tuesday. So here we are Tuesday, and we see that we've got a run on liquidity right here. We've got a run on liquidity right here, all before the silver bullet hour. This is our most recent run on liquidity. Right here, taking that low. So again, all we want to do is wait for some displacement. Let's see what we get. Do we get displacement here on the 1 minute time frame? No, not quite. Actually, I do stand corrected. I apologize. Got ahead of myself. There is a small, it's very small, guys. I mean, but we got a small fair value gap right here. I just want to count this. Don't want you guys thinking I'm missing any or purposely leaving any out. I'm not. And what I would do, and this is exactly what I'm talking about, guys. So what I would do, at most, I would do a 2.75 handle stop loss. Why would I do that? Simply because I'm getting below this low. Why would I need to add on extra risk for no reason? If it's not going to hold this low, guys, it's not going to hold it. There's no reason to add on a whole extra, double my risk basically for no reason. That's for me personally. If you're more comfortable doing 4 to 5 handles either way, no matter what, by all means, do what you got to do. But this is just how I would add my own touch to this to make it even more accurate and better R to R. So here we already see that 5 handles got hit on this fair value gap. Amazing. Let's see, maybe target another take profit up here at this high right here, right? So almost you're at 9 handles right there, so you're actually over a 1 to 3 in this scenario, which would be nice. Let's see if it gets up there. So no, you got stopped at break even. All right, amazing, good to go. So you won that trade. Now you see another fair value gap, and we're just gonna play every single thing that we see on these charts, guys, just to keep everything as neutral as we can make it, and nothing is left out. Okay, so we're 1-0 so far on Tuesday. You could anticipate getting short right here. 3 handle stop loss, no. 4.5, let's see where 5 gets us. So 5 handles wouldn't even put me up here. This is what I would do, guys. This is what I would do. I would put my stop 1 tick above the high. And then what I would do is I would drag my entry to about 50% of the equilibrium of this gap, consequent encroachment of the gap. And I would look to enter right here, somewhere in this area. So that way my stop loss can be right at about 4, for sure under 5 handles, right? This is how you can modify your trades, guys, to make sure that you're getting the best bang for your buck, the best entry, but also make sure your trade is protected the best that it can be, right? So let's see if price does come back to this fair value gap, and if we get triggered in. Price is just absolutely pushing lower. However, there is a fair value gap again right here that does get tapped into. However, I would argue that you probably would not be entering off of this, and here's why. So if you were to draw up your gone box from where that low started pulling back, you are in a discounted price range. Smart money is not looking to sell in a discounted price range. So therefore, I'm not looking to sell in a discounted price range. So therefore, I would not take that trade. But obviously, just marking the fair value gap, you guys can see that it reacted out of there. I don't think it gave 5 handles, however. So that is one thing to consider or note, that has taken place. So you could either delete this trade or you could hold it and wait and see. What I do see forming right now is another potential, fair value gap, because why, guys? We had a run on liquidity here, and this was the gap that formed. So this could be an entry for a sell. However, we've now pushed below these lows, which is another sweep of liquidity. And now we're starting to displace back to the upside. So we'll leave both in play here, just to see, just for sake of the video, guys, so we can really get a full back test approach. But, we'll say that you're going to enter off of whatever one hits first, and you're going to delete whichever one, doesn't get hit. So I would do the same thing here, 1 tick below the low, targeting 5 handles. Let's see what happens. Does it activate? No, it doesn't. Price does pull back one more time into this fair value gap. It would have been hard to catch it, just being truthful and honest. However, if you did catch it, stop below this low, 4 handles. Let's just delete this to keep our chart clean. So 5 handles looks like most likely is going to end up getting hit here, which it does. So you would have been good there on the long if you got long in this fair value gap, which also lines up with this breaker block. However, now if you're entered into this sell, let's see what happens. Right? Let's just say you were gun-ho and you took this trade and you were out at TP1. Okay? Let's just say that. And now you're in this trade. Price came up right to this high, to the exact tick, but didn't go above it. You're targeting 5 handles. Let's delete this fair value gap. See what we get. Do we hit 5 handles? Yes, we do. So we hit 5 handles. Now let's target this fair value gap for potential TP2. Almost got hit. Doesn't quite get hit. And then you're out at break even. Okay, great. So honestly, whatever trade you took, this buy would have worked out. This sell worked out. This buy worked out. You're doing just fine. You're 3-0. You are 3-0, and then one more trade that I see that just formed. So you got stopped out at break even here. But now, what you could be looking at, again, a couple different things. You've got opposing liquidity right here. You've got relative equal highs, so that's a great target. You got a fair value gap here. But guess what else? You've got a fair value gap here. Let's just say you got this one. Stop below this low by one tick, 3.25 handles, 5 handle TP1. Assuming we'll go for that liquidity. Let's see what happens. So you would have been stopped out doing this. Let's see if you entered here with your stop below this low. Does it hit 5 handles? Yeah, you would hit 5 handles entering off of this fair value gap. So, you know, guys, but this was a justifiable entry nonetheless. Let's see how price plays out from here. Just curious. Yeah, still just kind of chopped around. So, you know, guys, we'll say 3-1. I think 3-1 is very fair for all the possible trades that you could have taken on Tuesday AM session for Silver Bullet Hour. And now let's go ahead really quickly, delete some of this stuff. Let's go look at the 2 and the 3 minute really quickly. And we're not going to go back and bar replay. Let's just see what happens. So we do see that price obviously swept this liquidity, still running into this hour. So we're still looking for displacement up in order to get long. So we don't get that at all. Price comes down, sweeps more sell side liquidity. So therefore we're still looking to get long. What do we see? Fair value gap right here. Beautiful. Looks like it literally comes down to the very tick of it. Stop below the low, great. 3.75 handles. Targeting take profit 1 at 5 handles, amazing. Even if you targeted this high, 11 handles for TP2, boom, that got hit to the tick and then retraced, stopped at break even. Incredible. Absolutely amazing. And then the 2 minute time frame would have also allowed you, if you wanted to, after getting stopped at break even. I probably wouldn't have personally. I would have just been done. But just for sake of the video, you could have entered here one final time. You'd have been triggered in on this candle right here. Your stop loss below the low, one tick, 4.5 handles. 5 handle TP1 gets hit, and then you're stopped at break even. Great day. So 2 minute time frame, 2 trades, 2-0. And now, last but not least, 3 minute time frame. So this is why going up in time frame sometimes can kind of hurt you, and that's why I call the 2 minute and the 1 minute kind of the sweet spot. 1 minute for sure for AM session, I like it. I'm okay with using the 1 minute there. But you guys can see here on the 3 minute, you actually don't even get this fair value gap anymore because this is closed. No fair value gaps in here. So you delete this trade, so you miss out on this trade altogether. The only trade that you maybe possibly take is this little 3 minute fair value gap right here. Very tiny, but as you can see, it gives you a pretty great entry. 3.75 handles would be your stop loss for this one, and yeah, you hit a TP1, and then you were out at break even either way. So 3 minute time frame, you're 1-0. 2 minute time frame, you're 2-0. 1 minute time frame, you are either 3-1 or 4-1 if you're looking to take every single trade, obviously, which I'm assuming most of you probably are not. But again, just for sake of the video, we had to put that in there. So now let's move on to PM session for Tuesday. Everything's going great so far. There we go. So let's play this out, see what we get. Boom, got a push up above this high. We've already been pushing above these highs right here on the 1 minute time frame prior to the beginning of the hour. Let's see, we do have a fair value gap left behind here on the 1 minute time frame. We can anticipate that. Going short, stop right above this high, 2 handle stop loss only. Very minuscule, which is great. Targeting 5 handles still. Let's see what happens. Do we get a pullback into there? Not yet. New fair value gap formed right here. New fair value gap formed right here. However, I wouldn't enter off of it, me personally, just because I'd want to wait for price to enter a premium in order to short. So I'd still just be waiting for this. We can keep dragging this down as each candle forms to see if anything changes. Now that we are actually in a premium at this equilibrium, what I would do, guys, I'd be willing to enter off this gap. However, I wouldn't be looking to enter until we got to this equilibrium point, which is 37.25. Let me see if I can edit this to be 37.25. Okay, it is. So this is exactly on that. And then what I would do for a stop loss, I would just keep the same stop loss because we're still only 3 handles, believe it or not. I would just have to target my take profit a little bit lower to still get those full 5 handles out of that entry. So let's see. Okay. As this continues down, I would continue down my PD array like this. Now this full gap is in play. This full gap is within play. You can justify taking an entry off of it. And what I would do with my stop loss, you could either leave it right where it is up here, 425, all good. Seems like a big stop loss, but it's really not. Targeting 5 handles would then put me down here. Again, where this is all still in the 1 minute, which is pretty crazy. And let's just see what happens. Does this get triggered in? No, we just keep pushing lower. These are equal lows. This is just a run on liquidity now. So actually what I would do now is I would delete this because we're shifting at this point. And I would say we're shifting potentially to the upside. So if we start displacing up, there we go. Here's a gap. Might have jumped the gun. Let's see what the next candle does actually. So, okay, I lied. There's no gap right there. Oops. Let's see what happens. So we do have a fair value gap that forms right here. Very small one. Very small fair value gap right there. Stop below this low. You can either do below this low at 2.5 handles, or if you extended it to here, 1 tick of room, 375, great. Puts you below that low. Targeting 5 handles, TP1. Let's see if this hits. Doesn't hit. Doesn't hit. So I'd be deleting all entries. Deleting all entries, and I'd just be not taking a trade for PM session. But let's see if we see anything different on the 2 or the 3 minute. Which I told you guys I don't even look at the 1 minute, which I don't know why I just went over the entire 1 minute. But that's neither here nor there. So, okay. Here we go. Super liquidity right here. Same one from the 1 minute chart that we noted. So again, let's mark up these fair value gaps. Here's one right there. Obviously, we've got a big one right here. Which you could potentially say gets tapped right here. It doesn't actually get into it. It comes right to the end, like the open of that gap right here. So some people might have market executed. If you were setting your limit order, odds are you might not have been triggered in. But again, we're just going to play, we're going to backtest every single thing here so we get all the possible entries that you guys would have gotten. If you would have done that and entered, boom, you took a TP right there. Or once you saw this run on liquidity, you shifted your bias, right? Because that was your TP1 on the sell. If you caught it, now you'd be looking to shift over to getting long right here, which doesn't get hit. So nothing really there. I wouldn't be looking to take these entries to get long personally. I would just be done and walk away. Maybe you guys would take them. I can't say that I would though. If we go to the 3 minute, do we get anything different? The only thing different is that you don't get the entry for the sell right there. And then entry for the long right here also does not activate. So let's just say PM session is kind of a no trade, because that's pretty much on most of the time frames. There's only a finicky possible trade on the 2 minute. So that's not something that I want to count. To me, I would argue most people would have not caught a trade. And me personally, if I was trading, I would have not caught anything. So let's move on. So here we are, 9 a.m. Wednesday. Let's drop down to the 1 minute time frame. What do we see? Run on liquidity in the macro. Beautiful. Right before the beginning of silver bullet hour. Nice, easy, clear. Run on liquidity right there. Now we want to see displacing price up before we look to get long. So let's see where we get anything to form. Oops. Didn't mean to click play. Nothing yet. No fair value gaps on the 1 minute yet. Oh, I lied. Let's go back really quick. I'm sorry. So, what do we see? The tiniest ever fair value gap that I almost just missed. Didn't even spot it. But there is a fair value gap right here. Let's say your stop goes below this low, 2.5 handles. If you wanted to include this low, you could be at 4. 5 wouldn't put you till like you'd put you down here. The only thing I would say is if you really wanted to be below this low, this swept liquidity, just make sure your TP1 is a 1-to-1. That's all I'm gonna say. But the strategy is to give 5 handles. So I'm only ever going for a 1. I don't ever want to be going for less than a 1-to-1 for TP1. That's just me personally. If you guys don't like that rule and want to do something different, do what you got to do. But I would do this right here, 2.5 handles. And then I would target 5 handles. This would be a straight up 1-to-2, which would be nice. Price triggers in, and let's see what happens. Do I get stop loss? Or do I hit stop loss? Do I hit take profit? Let me mark the end of this hour so we have it ready. So boom, take profit gets hit. 5 handles, boom, great. Targeting this would be high number 2 for TP2. Let's see if this gets hit as well, or if we get stopped at break even. Does that get hit? No, not quite. There, it looks like it got hit right at the top of those wicks. Yep. So that got hit. Great trade. You're 1-0 on the 1 minute, and let's see if you would have got a better entry on the 2 minute and or 3 minute really quickly. So yes, you would have. You would have been in earlier, and you'd have gotten a better entry. Delete this. Right there. Enter it at the beginning of that gap. In this case, a 5 handle stop loss puts you below that low. It's not exactly necessary. It works out pretty much anywhere where you put the stop loss, as long as you're obviously below this candle. But worst case scenario, 5 handles down there, you're targeting 1-to-1. So here's the benefits of the 2 minute. You got in earlier, you got a better entry. The downside of the 2 minute in this case is now your stop loss is 5 handles instead of what we got before, which was 2.5. So if you're okay with that, you're okay with that. If you're not, you're not. It is what it is. But there you go. Either way, you caught this move. And just for fun, let's see what happens from here. So if you left a runner, and this was actually one of our winning trades from the week. We caught this trade to the upside. So yeah, beautiful trade there Wednesday for AM session. Now let's go ahead and mark up our PM session. Dropping down here to the 2 minute time frame. Let's see what we got. Boom, we got displacing price lower. We already know that we've been sweeping buy side at this point in the day because price has just been pumping. So here we go. Let's see if we get displacement on this candle with a fair value gap. We do for sure. Here you go. Fair value gap. I like that it lines up with this structure right here, this breaker and or order block, whatever you want to call it, guys. This is the same stuff. Don't overthink it. Stop loss. Boom. Either way, you're good. Let's say 5 handles, worst case scenario, you wanted to be above that high. Great, no worries whatsoever. Targeting 5 handles, TP1. Boom, triggered in. TP1 gets hit. Here's TP2 right here, 8.25 handles. That gets hit as well, and then the session's over. Pretty easy. Pretty easy there on the 2 minute, 3 minute. Let's see if that entry was offered as well, and it was. Great. So it looks like every time frame would have been just mighty fine for Wednesday. That's nice and easy. So great. Let's move over to Thursday AM session. All right, Thursday AM session, 1 minute time frame. And benefit of hindsight here, guys. Again, I'm back testing this after live trading it all week. But benefit of hindsight here, I want to show you something. 15-minute time frame. What do we got? We're leading right up to the beginning of this. Sweep of liquidity here. 1 minute time frame. So this played into our trade on this day, which is why I'm showing you guys this. But we'll still look at this with a very neutral eye, okay? Just to see how we want to play this. Okay, great. So boom, price is pushing up. As of right now, I would be, if you're not considering this liquidity sweep from the 15-minute, if you're not considering that, you know, right now I'm thinking liquidity sweep right here might push down. But I'm waiting to see how this reacts. As price is continuing to push higher, I no longer think that. Because why? If this was a liquidity sweep, I'm expecting a reaction, not for price to just keep pushing higher and higher. So now at this point, I would play this liquidity sweep. Or I'm sorry, this fair value gap. As long as price pulled back into here. And what I would do to anticipate this, let's see where we're at. If we were to enter at the beginning of the gap and your stop loss was right here at 5 handles, you could do that. It'd be right at this low. You would have 0 wiggle room, but you could do that. Or if you wanted, you could do consequent encroachment, enter off of this part of the gap as well. Totally up to you. 5 handles. Let's see if it even pulls back. Thursday, yeah, never does, just keeps going. And we, full disclosure, we missed the trade opportunity for AM session, and I want to show you guys how we missed it and how you could have potentially caught it. So if we go up here to the 2 minute, same story, right? Nothing different necessarily here on this 2 minute time frame. You still miss this whole move up. But as you go up to the 3 minute, there is one subtle difference, and that subtle difference is this fair value gap ends up getting extended to here, in which point this triggers it in. Your stop loss is now 6.5 handles if you're going below this low. If you just want to do the stationary 5 handle stop loss to get below the fair value gap, could do that if you wanted to target 5 handles, or if you target down, if your stop loss is down here, totally fine. Just make sure you're targeting 1-to-1. That's my advice. Don't have to do that if you're okay with a negative risk reward, but that's how I would do it. So the 3 minute time frame is the only way you catch this entry. TP1, TP2 both get hit, and then maybe you extend one take profit to like 15 handles and see if you get 3 standard deviations, and you do. So price ends up just running up for that entire hour, and that's all there is to it. So if anything, no trade. We didn't catch a trade during this session because we missed this 3 minute time frame. I was looking at the 1 minute, and there wasn't one on the 1 minute, as you guys saw. But then again, we traded a PM session, and we caught an amazing trade. So let me show you guys how PM session went. So here we go. We're in PM session for Thursday. Couple things to note here before we get into the hour. We see we're already pushing these lows, sweeping liquidity, but we're also now tapping back into this fair value gap from the morning session. So now let's watch for displacement, a fair value gap. Looky there. We do get a fair value gap to form after the sweep of liquidity. Let's go ahead and anticipate that. stop right below this low, give an extra tick of wiggle room. So now we're at 3.25 handles for a stop loss. 5 handle TP1. Price triggers in, hits TP1. Okay, great. Let's say you use this high for TP2. Great. TP3, this opposing liquidity. Boom, that gets hit. And let's say you got real ambitious and said, I think we're going to go take out these highs before the end of the day. And if you did that, my friends, you were smiling ear to ear because it did all that and then some. And price absolutely ripped the rest of the day. On Thursday, crazy. But that's how you would have caught that trade. Let's look at the 3-minute and see if you see anything different. 3-minute, you would have missed this trade. No fair value gap formed up until right here. So this could have been a potential entry point. Obviously, benefit of hindsight, you know that this is the move. So it's easy to say that you would have entered there. But if I'm being truthful with you guys, I wouldn't have entered there. I would have considered myself already have had missed the move. I would have been waiting for one of these gaps. Would have missed it. Just being honest. And that's all I can do is just tell you guys the honest truth. And I think most people would have missed this. Unless you're just so gung-ho that you have FOMO and you can't help yourself. Like, I just don't think a disciplined person is entering there. I mean, you're either extremely, extremely, extremely experienced and know something that I don't, or you're just, I don't know, gambling. That's just my opinion. So let's go look at one final day, Friday, which was today as I'm shooting this. Obviously, we had Jerome Powell speaking. So I didn't even trade today. Silver bullet hour. We've got a sweep of liquidity right there that I see waiting for displacement, fair value gap. There's an energetic move, but no fair value gap until right here. And as long as this low gets left behind, you could anticipate entering off of it. Where's your stop going to go? 5 handles puts you above here, so great. Triggers you in. Stops you out. So exactly why I didn't trade today. But for sake of the video, we got to cover it, right? So boom. Stopped out if you took that trade. No worries. But maybe you flipped your bias and you said, okay, here's a sweep of liquidity. We've been bullish all week anyway. You could have caught this trade. Fair value gap right there. Entry came right there. Stop loss. Let's just say 5 handles, which puts you all the way below this low. Perfect. 5 handle TP1. Uh-oh. Let's mark the end of the hour just so we have it. Here's another fair value gap. Could have entered off of it. But this trade looks like it got stopped out right here, which it did. So boom, that's another L. So this is 0-2 on Friday. You guys can see why I took the day off. But just for fun, let's say you took an entry here. Maybe you missed this trade and you happen to look at the charts and you saw this. Let's just see. 2.5 handle stop loss. Oh, 5 handles almost got hit, but it didn't. So either way, you are just a loser if you traded AM session and you're trading silver bullet. So that sucks. That is, I'm super happy I didn't trade today. I didn't even do that much back testing. I just saw price and was just happy I didn't trade it. 2-minute. I don't think anything different. If anything, you were looking to short here, still most likely lost. Let's mark it up. And let's see. Maybe not. Maybe not. This is on the 2-minute, remember now. So boom, mark this up, short. 5 handles does get you even less than 5 handles. 4.25 gets you above this high. 1 tick, it comes right up there again. 1 tick to that high. And let's see if it gave 5 handles. It definitely did. So on the 2-minute this morning, you could have gotten away with a trade and you could have won. you could have actually gotten away with 2 possible entries on this same exact setup. You could have entered there, or you could have entered here. Mark that up. Stop above here, same exact stop loss, really. 5 handles would have had you out right here at TP1. TP2 could have either been this low, or you could have targeted even lower. Let's just see how low it goes. Oh, yeah, it absolutely tanked when Powell started talking. Oh, yeah, so that would have been great on the 2-minute. And then on the 3-minute, anything different whatsoever. Let's delete this and keep it clean. Same gap right here. The gap is much, much, much bigger, so that would have been tricky. Very tricky, to be honest with you. Would have ultimately just not wanted to trade it. Still get this same gap right here. So, yeah, the 3-minute would have got you in right at the end of the hour. So that would have been borderline if you would have even wanted to enter, because it's literally right on the 10 o'clock hour candle. But that would have gotten you in this one and only trade. Great entry. 1 tick above 3 1/4. 5 handle TP1, and obviously could have targeted other TPs from there. But okay, great. So we know that that was a possibility. And I did not look at price during a PM session. Just took the whole day off. But let's go look. So here we are on the 2-minute time frame. Coming into the Silver Bullet PM session for Friday, last one of the week. Waiting to see what we get here. Kind of considering this right now a sweep of liquidity. We're on the 2-minute. That's as low as we're going to go. No displacement yet, though. Now we're taking this low. So I would see this as the new liquidity sweep. I would not want to get short here, simply because I'm looking at this as now a potential sell side sweep. So great. Here we go. Here's our gap. 2-minute. Pretty big gap. Let's see what our entry would look like. Entering right at the beginning of the gap. Oh, you could either go right here and do a 1-to-1 risk to reward, or what you could do is go right here and you could say, okay, how do I decrease this down to 5? So boom, do that. Make your entry inside the gap instead of using the actual open of the gap. That way you can still target 5 handles and get a 1-to-1. Let's see what we get. Price does trigger in. Hits TP1. Fantastic. Maybe you target these highs for TP2 before the end of the day, which is right here at 3:30 Central Standard Time. Boom. You most likely got stopped at break even right here with spread, but maybe not, just in case you didn't, or in case you got a better entry down in here, like the 50% or something. We'll entertain it. Gets real close to those highs. Doesn't quite get them. At this point, you're really close to the end of the day, and even if you didn't close it, you got stopped at break even right there. So yeah, Friday PM session ends up being pretty decent. Let's check this 3-minute and see if this looks any different whatsoever. It does, in the sense of this gap ends up becoming a little bit smaller, and it shifts up a little bit higher. But I think it's all in all kind of the same story. Either way, you'd have been looking to enter down in here, not right at the beginning of the gap, because your risk to reward wouldn't have made a whole lot of sense. And if we delete this position altogether, and maybe you just kind of missed this gap or whatever the case might be, let's say that you went long in this gap just for fun, which I don't think you would have, because yeah, you definitely wouldn't have, because by the time it triggered in, you're already after the hour, so that voids the rules. So there you go, no trade there. All in all, I don't know exactly what our record was. Maybe you guys can, if you took note and you were tallying it while watching the video, let me know. Hopefully this was insightful, though. We literally just went through Monday through Friday, AM and PM session, and we went through multiple different time frames, 1 through the 3-minute, and you guys can kind of see the dynamic between trading on the 1-minute and then like some of the noise that gets cut out on the 2-minute and the 3-minute, but then also how you could potentially miss some trades on like the 3-minute, and I'd assume it only gets worse if you're going up to like the 5-minute or something like that. So do your own back testing on the NASDAQ if you would like, and obviously use this information for however you would like. Just a disclaimer, when we're trading live, in our Discord every single day. That we are constantly looking between these three time frames. But I will say that on the AM session, the 1 and the 2 minute is kind of the go-to, and then on the PM session, the 2 and the 3 minute are more so the go-to for me personally. And the entries that we have been finding and taking live with our Discord. If you guys want access to the Discord, I'll keep it linked in the description of this video. Hopefully this was helpful. And let me know if you guys have been trading with the strategy, how you guys have been doing. Let me know if there's anything you want to add to this video in the comments down below. If you got any value, I'd encourage you to hit the like button. Subscribe if you feel like I've earned your subscription. We're going to do these videos every single week. Just back testing and going over the strategy principles alone, nothing else, nothing more, to help master the strategy and help you guys, hopefully master it and become profitable with it. But without further ado, hope you guys have an amazing weekend, and I'll see you guys next week. Peace out.